Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Monday, October 31st, 2016, and this is the Daily Report for Gold and Silver. On the last day of the month, the one thing that we can say is that we have some uncertainty in the market. We could see that in U.S. equities trading very, very mixed, crude oil trading dramatically lower, and a boost to the precious metals. Marginal fractional upside move today. As you can see, COMEX gold is trading higher on the day, up about $2.10, currently at $12.7890. It's traded at a low of $12.7190 and a high of $12.8050. So we're closing just about $1 plus off of the highs, but again, a very, very contracted range as the public at large here in the mainland in the United States tries to put a handle on what is going to happen in 8 days as voters go to the polling booths to vote for the next president of the United States. When we look at gold in terms of spot prices in gold, let's go ahead and let that change. As you can see, we're currently up about $2.30 plus, 1277.90, roughly in that area. Same highs and lows, 71.79, so a contracted range. In terms of net change, about 0.2% is what we're looking at. Over to silver. Silver's actually trading nicely and nicely higher, up about a dime today, up 0.6% at 17.90. The low on the day has been 17.75, and we're trading just off of the high at 17.92. Lastly, we'll take a quick look at spot silver, which is at 1789.2. Let's take a look at our first chart. So traders, obviously, when we look at a weekly chart, and that's the chart that we are starting with, we're not going to see that much net change. Of course, this week is just beginning, and that's this candle forming. We're up about, as I said, about $2 on the day. We'll try to convert this over to a daily chart so we can get maybe a better indication of what we're looking at. When we do that, there's a couple of things that really stand out. And that's the first thing, is that we've had this slow, gradual ascent to higher pricing. You can see these series, not consecutive higher lows and higher highs, but as a whole, we are seeing this market really, it found support at 1250. We talked about that on Friday, no question about that. And we've seen these series of higher lows as well as higher highs come into the market. Of course, today, very, very uncertain day, very tight range in pretty much all of the markets that we look at. But nonetheless, we are closing on a positive note. A dollar not doing too much in terms of what we're looking at. That was fractionally higher when we took a look at it, but it's been a little bit higher and a little bit lower through the day. When we compress this a little bit, my sense right now is that we have formed a base, we are moving to higher pricing. And as I've said last week, once we came off of these particular lows, so that we felt fairly certain that what we were looking at was in fact a market that had formed a base and was moving higher, different levels that we could find some resistance at. And we'll pull up that chart in a second to kind of go through those areas. But just to take a real cursory look, what we want to do is kind of look at different highs that came into the market. We've got this one top here that comes in around 1300. We don't really have a lot of activity anywhere else that is in between, say, this particular price point at about 1275. 1278, of course, is right in this area. We don't really have any kind of a technical area in which we can find either support or resistance in the market. And that's why my sense is that we've got fairly clear sailing up to at least 1292 to 1300. And of course, traders, we can really see that when we take a look at this particular chart, in which we have a couple of fib retracements. We've got the 1250, which is a 38% retracement right in here. That is our basic support area. Absolutely, I believe firmly that that is really going to be the line in the sand, and I believe that this market will hold this particular area. In terms of levels of resistance, we've got 73. That's a 23% retracement. That comes in right here. We're well above that. The low today, if we take a look, 1273.40 is that number, and the low today was 1271.90, so it went just a tick into that area, but caused no technical damage whatsoever. And the next real level is the 38% retracement that doesn't come in until 1292. And so it is for that reason that I believe we should have clear sailing, and my exit strategy in terms of pulling profits still really is looking at this particular price point between, say, 1290 and 1300 as our point that will pull exit from our long at 5960. Maintain your current long position, maintain your current stop. As I said, I will look to move that up. We're looking to move it up just below 66. We'll probably do that later on tomorrow. I'm watching the market closely, so if we do see some sort of weakness come in the market, I will not hesitate to send out a special trade alert. But for right now, we're just going to leave it where it is and look for this market to move to higher ground. And so traders, lastly, I do want to take a look at silver today. As you know, we have been sidelined on silver, and it's been my contention that unless we can see silver prices really move up to what I'm pegging as our resistance line, and that resistance line is this trend line here. It's simply created by going from these particular three lows here, extending the line forward. We are still well below that. We also have a 28-day moving average. That's this dashed blue line, and you can see they intersect right here, and I would look for this market to break above that. That means it would actually break above $18 per ounce. And traders, unless I see the market really move into this area, as I said, I'm a little hesitant to get bullish. Plus, we do have a nice trade on. We've got profits building in our gold trade. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.